Now let's welcome on board the MD and CEO at Ashok Leyland. Shenu Agarwal joins in on the show right now. Mr. Agarwal, great to have you today on ET Now. It's been a decent quarter for the company, but highlight is that you are now the leader in the bus market share. What worked well for you this quarter, and you think it's sustainable going forward?
So see, the bus market is picking up very, very fast. That is one big factor because during the COVID time and even after that, when we were having a market down cycle, the bus was the one that suffered the most. But since the time the market started reviving, the bus market is picking up really, really well. And Ashok Leyland has always been very, very strong in the bus segment. So we are actually playing on our strength. And we have really improved our market share by roughly 9% in the first half of the year. Overall as well, we have improved our market share in MHCV. But yes, bus has been a strong point for us in this first half.
Right. We have also seen competition in the MHCV segment, and that's only been increasing with more launches and more discounts. So how are you assessing the competitive environment? And in light of that, what is going to be the company's growth strategy?
Look, we are very, very clear on our growth strategy. We are not taking any short-term measures. Even if sometimes we are compelled to, we kind of try to avoid that. We are very focused on the fundamentals of growth. On one side, we are developing better products. On the other side, we are really focused on expanding our distribution network. Right? So we want this market share growth to come from fundamental improvements that we want to make, whether it is on the product side or on the network side.
Sure. LCV, though, has been a key drag for industry players. Tell me, what's the visibility for second half, which is generally better for the CV industry? Do you expect any rebound?
Yeah, see, LCV, has not grown to the extent that we were expecting. When the year started, we had given a forecast that LCV industry, and I'm only talking about 2 to 3.5 ton where we play. So that industry we thought will grow by 4 to 6%, but the industry has grown by 3%. So it's slightly short of our estimate. But having said that, I want to also say that in H2, there are some green shoots that we are seeing. Even the e-commerce demand is building up. I think the rural demand is also building up, right? So in both the cases, I think whether it is LCV or MHCV, we think we are very positive and optimistic about the second half and even going forward.
And how is it that you're looking at growth in the second half of the year? Are margins expected to improve even further from these levels?
See, as far as the margins are concerned, like I said, we are very, very focused on profitable growth. Even in the first half, we were able to take a good price recovery or good price realization, as compared to the previous half. So I think those efforts will continue. I think what will also help us in second half is the softening commodity prices. I think we are getting a lot of indicators that the commodity prices would be softening further. So that is one. The second is our continued focus on better price realizations and better mix. That is the second one. And the third one, I say, which is probably the most important and fundamental, is that we are very, very focused on increasing our efficiency. Now, whether that is in direct material sourcing, whether that is in indirect material, or it is in our sales and production overheads, we are looking at each of the costs very, very carefully. So we are very optimistic that we will be able to increase our margins from here. Like I said, when the year started, we said that this year we want to achieve a double-digit EBITDA margin. We were very, it was very nice that we could do that in the first quarter of the year itself, because in Q1 we reported 10.0% EBITDA margin. In quarter 2, now we have reported 11.2. And I am very optimistic that quarter 3 and quarter 4, we will improve our margins from here on.
All right. Thank you for taking time out and joining in and giving us more insight as to how the overall business is shaping up and what the outlook is for M&M.